All right, we're recording. Good morning, everyone. Welcome to this week's Business Times Nigeria Weekly Podcast. We are recording on a Friday. Typically, we don't record on a Friday. We record the day before, but I mean, Friday is a holiday. There's so much happening around the world. There's so much happening in the Nigerian market. So much I think will happen in the Nigerian market that I decided to break the rules. So with me here is Sunday Alabi. Sunday is an investment operations analyst. So thank you, Sunday, for giving me part of your holiday. I mean, I the finance world is crazy. So to get people to actually step out on a holiday, I mean, even if you told me to do that, I would think hard for this. So thank you for obliging me.
So thank you, Onome. It is my pleasure as well to be on this show with you because I cherish what you do a lot, and my pleasure as always.
All right. So thank you for obliging me, and let's get into it. I'll start off. Let's start off with GTCO.
Mhm.
GTCO is probably, I mean, for those who don't know, what you have listed on the stock market in Nigeria is Guarantee Trust Holding Company. It's a holding company. The holding company comprises GT the bank, Habari, the asset management firm, pension units, and yeah, and a few other things, I guess. So that's the listed entity. But I always like to say, old names stick hard. So if you went or you talk to a broker and say, hey, I'd like to get info on GT Bank shares, they would still recognize that, even though the official name is GTCO. Same way you have First Hold Co, but people still call it First Bank Shares and all. So just to get some clarity for the audience. In any case, GTCO dropped audited FY 2025 numbers a few days ago. They are, I believe, the first of the Fugas banks to do so. Fugas is an acronym for the big five financial institutions in the country: First Hold Co, UBA, GTCO, Access Holdings, and Zenith. So we have GTCO with their numbers out. We're waiting for the last or the rest four. Um, the results quite good, and in some ways, it's not a surprise with GTCO. GTCO is like a student that always performs well in class. You know they're going to get first place, second place, third place. So you're not surprised when you see that. But like with any brilliant student, what people want to know is okay, maybe you had an A in maths and a B in English. Why did that happen? So with GTCO, 865 billion in profits after tax, and the firm has proposed a final dividend of 11 naira 76 kobo, bringing the total dividends for 2025 financial year to 12 naira 76 kobo. And I must confess that I think it was last year when one of the signals for me that we had higher retail participation in the market, was when GTCO, I think, proposed an 8 naira final dividend or so. And I was seeing a lot of excitement on Twitter. I have not seen that kind of excitement. People were really excited. And when you look at what the public offer was, I think it was less than 15 naira shares. So there was so much excitement about it. I mean, in some ways, I was happy to see that. I was also curious. That, oh, really? So you guys all took part in the public offer, and yet public offer probably did, 50% subscription. But in any case, it just shows that you have more participation by retail investors, and I would say younger retail investors in the market. So what was your impression of the numbers? What stuck to you, or what were the key numbers you saw in the financial statement that you found interesting?
Okay. Okay. So thank you, Onome, for the question. So two number stood out for me in the financial statement of GTB. Just as you said, GTB are supposed to be the most effective run banks in Nigeria, and we can give it to them as the king of banks in Nigeria, right? So when you look at the interest income which stem from the core banking business, we see that GTB number, when you compare them on year, grew by 23%, which is powered by the increase in their loan. And when you check their balance sheet, you see that their income earning asset, which is the loan to customers at business, increased by 12% when you compare it to last year, which shows that the banks is doing pretty well in the banking business. Then the other numbers that as well sparked my attention is the non-income part of the business, which is your fees, commissions, and the trading activities. We see a 40% down from on a year-on-year comparison, which shows that the year of revaluation gain from FX is gone. So we are going to see a bank that is thriving based on the core banking business. And when you do this down into the number, you see that basically at the bottom line, which is profit after tax, when you look at it and when you compare it to the performance in last year, you see that the banks declined by 19%. But when you look deep into the number, when you compare or you start from the profit before tax, you will see that the bank's number, when you compare it between 2024 and 2025, you see it stay flat. However, what make a difference between the numbers for GTB is the effective tax rate for this year. And when you check the effective tax rate for this year, GTB effective tax rate is 30% this year. And when you look at 2024, it stood around 22 or 21%. So incredibly, GTB has done well as a banks, and numbers we have shows that they will remain a top tier banks in Nigeria. And not just that, when you look at how they compensate their investors, the banks declared a total dividend of 12.78, which is an increase about 59% when you compare it to 8.03 total dividend declared in 2024. And as well, when you look at the net income grew by 19%. And when you look at this, I think the only bank that came close, but we don't see their number yet, that we feel might be close to GTB Bank is any bank. So for the number dropped by GTB, I say the number is impressive, not looking at the bottom line, which is profit after tax.
Okay. Then I think maybe the only, and this is a recurring question. In fact, I tried to listen to GTCO earnings calls whenever they come out. One of the most common questions people ask is, you have they have the smallest loan book among the big five banks. And I mean, I think on one of the calls, I remember Segun Agbaje, who's the group CEO, saying, look, our job is, to paraphrase him, our job is to make money. Now, whether that money comes from yield on loans, whether it comes from yield on government securities, whether it comes from yield on AUM, the important thing is we're generating returns. But he has also kind of hinted that, look, we're going to dial up lending a bit. So do you think that, because I think the bank is in a catch-22 situation of some sort, or maybe we may have a repeat of this year. Now, prior to the Iran-US conflict, which obviously will lead to energy cost inflation, prior to that, one could safely assume that the CBN very likely would have maybe one or two cuts, interest rates cuts this year. And so lower interest rates would mean that the interest rate margins would compress a bit. Because if you have lower interest rates, a rate cut, it means that your returns on government securities, T-bills specific, would come down a bit. And if that comes down a bit, imagine you have, even though the deposit costs are quite cheap for banks, especially tier one banks in the country. So expectations of a rate cut, given what's going to be an impending spike in inflation driven by energy costs in the country, I would say are slimmer. But let's assume that, okay, we have rate cuts. Do you think that in the current environment, they would safely be able to significantly dial up lending? Do you think that that's doable? And some might argue that you are one of the big five banks in the country. If the other four have way bigger loan books compared to you, who are they lending to? I mean, you can always say, well, and everybody knows corporate lending is where the money is. You lend mostly to corporate, they have the best risk profile. But that has always been a recurrent argument for GT that you need to grow your loan book. And they probably will do so this year. But do you think that they might say, look, man, the macros are okay, but if I can still make the returns I'm making in government securities, why do I want to bother growing my loan book? Do you foresee any significant loan book growth in the firm this year?
Okay. Yeah, thank you for the question. So, for all the major banks, I foresee a significant increase in their loan books, which is going to stem from the new capital raise. The objective for the capital raise is to support the economy, which I feel most of the banks are going to do more than just corporate lending and move a bit to the most risky aspect of lending, which is SME and personal lending. So I see GTB increasing its loan book by a significant percentage. Probably we might see up to probably 15 to 20% increase for year 2026. And looking at the macroeconomic situation, yes, the expectation is that there should be a rate cut. But however, I feel the CBN was in hurry to cut the rate, because when you look at the current realities, shows that we still have inflation pressure in our economy. And when you look at it, we look at our core inflation figures are still higher than our headline inflation. And when you look at the impact of the Iran-USA war as well, significantly, we are going to see CBNs are going to maintain rate, as well, probably maybe increase the rate by some basic point this year, because when you look at the risk around this year is a pre-election year where there will be a lot of liquidity in the market, and as well the CBN will try to mop up this liquidity and to create a tight regime as we see. So I see that rate cuts might not we might not see a rate cut this year, but we might see CBN that maintains the rate in order to manage the macroeconomic situation, especially the monetary aspect of the economy. So significantly, we are going to see an increase in the bank's loan book by a good percentage due to the capital raised, which is meant to stimulate the economy and support the economy.
Okay. I mean, I was just looking at the loan book. GT has a loan book of about it's over 3.1 trillion naira as FY25. I think the biggest bank in the country, which should be Access, probably has a loan book of what? Maybe over 10 trillion. So everybody's looking forward to the Access numbers. Um, but that's a conversation for another day. So I'll be keeping an eye on GT. Hopefully, the call should be sometime next week. I'll jump on the call, and if there's any need for a follow up, we'll probably bring it up in the next episode. All right. So still in the financial space, there was some news yesterday, or yeah, I think it was yesterday or the day before, that the CBN has granted Flutterwave a banking license. And so, for those who don't know who or what Flutterwave the firm does, Flutterwave is a largely speaking a payments processor. So for they help facilitate businesses sort out payments. So if you've probably at some point in time used an Uber or used some of their merchants, you see somewhere in the paperwork powered by Flutterwave, or you see the Flutterwave details. So Flutterwave facilitates payments. Um, and now they have a microfinance bank license. Why is that a big deal? It means that they can now hold funds and deposits. Um, where do you stand on this? Because one school of thought, it's almost like a joke in Nigeria, or two jokes when it comes to doing business in Nigeria. The first is every eatery has to sell what license to you at some point in time. Doesn't matter if you're a foreign franchise, you're going to have to go local at some point in time. The second is every fintech ultimately becomes a bank. It doesn't matter what kind of fintech that you are. If you are in the business of dealing with money, you are either going to become a bank or you're going to become an asset management firm or get an asset management license. So where do you stand on this? Because I've listened to both arguments. Arguments for this or arguments pro this say, look, you have a banking license now, you can hold deposits. It enables you to do much better business with your merchants. Your merchants can simply open, you know, bank accounts with your microfinance bank. You have access to cash that you can put into some deposits. You can use it to make some spread. That's the argument for this. The argument against this is owning a bank comes with complexities. You have more regulation, paperwork, and in my view, kind of puts you into competition with some of the banks that you were doing business with at some point in time. So, are you? I mean, the deal has already happened, but are you for it, or are you against it? Do you think it's net net? It's a good move for them, or do you think it just adds a layer of complexity further down the line?
Okay. So just before I am going to share my sentiment of this, so we are going to use an information in the public domain, right? Which we have Paystack and Flutterwave dominating Nigerian payment service. So we'll look at Paystack, for example, has been operating for nearly a decade, and they are not yet near profitability in for 10 years, which means that operating in the payment service environment give you some revenue ceiling when you look at it. So most of these fintechs try to diversify their earnings and also increase their bottom line, because the cash burn rate at which the cash they burn every year will get exhausted when the funding is not coming, when funding is no longer coming. So they have to look elsewhere. So when you see fintechs looking into banking license, especially microfinance license, they want to go into lending, which means they want to do the core banking lending, like we have the like of Point Opay are currently doing, where they lend to SMEs and individuals. So I feel this is a good one, and my only concern is just the timing at which Paystack decide to come into the market, because when you look at the market currently, the market is currently dominated by Money Point, which square on the SME side, while Opay squares on the individual lending space. So I see that the timing is maybe quite late, but we don't know their strategy. But this is a move in order to improve their visibility, credibility, and as well increase their bottom line. However, this as well also comes with some risk, which is going to give them some balance sheet burden, because now they have to look at their CRR, their CRA, and also they are going to look at the fee they pay to AMCON for the asset, which is their loan book, and other regulatory fees. So it's a welcome development. It further helps to deepen the space, increase participation in the space. But what I feel, my own opinion, is the timing. I feel the timing when they are coming into this market is a bit late, but we don't know their strategy. For now, it's a good one.
Okay. I kind of agree with you on that. It's a much more competitive space. Money points everywhere, and all that. So you have the money points, OPays, PalmPays. So it should be interesting to see what will be their go-to-market strategy. I also feel like some ways this ultimately maybe this will pay the consumers is that when you have almost a lot of these payment processors, and SME focused fintechs, when you have a lot of them having banking licenses, it means that at some point in time you're going to see um, deposit fees rather, transaction fees get squeezed, because that's one way they're going to compete. Thank you for bringing AMCON. I'm not a fan of AMCON, and I've always said that AMCON is choking Nigerian banks. But unfortunately, the lifestyle cost. It's, Nigeria is not a country where people like to criticize. People like to criticize your governments. I do feel that the banks need to push for the winding down of AMCON. AMCON's lifespan is way overdue. I was looking at GTCO numbers. I think they're probably going to do around 100 billion as fees to AMCON and all that. So if you add up all the money AMCON is making from banks, the fees, you probably really get maybe can't be less than half a trillion naira in 1 year. So that's a story for another day. But I am pro AMCON being wound down. I think banks need to come collectively and maybe talk to Cardi B, CBN Governor Yemi So let's see how. But unfortunately, AMCON has become such a huge entity. It's very difficult to wind down government entities in Nigeria. It's extremely hard, and just all over the world, really. That's why people don't like big governments and government entities because government entities, the government tends to become bigger and bigger. It's difficult to reduce the size of governments and all. So I hope AMCON gets one down now. Good luck to the Flutterwave team. I believe also as well that I think Paystack has has a microfinance bank license because I know Paystack tried to do this
Yeah, they do, they do.
product that they did, products they had to run into some regulatory issues, primarily the same way because you're a payment processor, you cannot be handling money like this without a microfinance, a banking license. So it will be interesting to compare both. Okay, so that takes me to a non-financial story, an interesting one. So the federal government has introduced a sweeping regulatory regime requiring all new and used vehicles imported into Nigeria to obtain pre-shipment certifications. Long story short is that your imported vehicles are going to become more expensive, and they are already expensive. So people won't like that. I think maybe I'll stick to the financial side of things. The elephant in the room, the few indigenous vehicle manufacturers, your innocent, your not one of the points they've advocated for is look, in order to stimulate the industry, um, we need better access to credit. So if you have more people being able to buy a car on credit, but if you're looking at cars at 20, 30, 40 million, the question is you use a what straight line depreciation, I think of 5 years, maybe you're going to be paying what 8, 9 million or 10 million a car. How many people can afford to spend 8 million a year on a car, the car loans and all? So how one is, I mean, let's not even get into the fact of what is the substandard vehicle, because honestly, um, I I think, look, do we need more vehicles? I mean, it's a complex thing. Some might argue if you had a working transport system in urban areas, bigger buses, rail, waterways being used properly, nobody's really going to be fussy about cars. So we don't have that mostly, and that will be solved anytime soon. But how do you think we can solve the credit issue? Because the banks will tell you, look, we want to lend money, we're sitting on money, but identity is an issue. The process, people skipping loan payments, just the whole law enforcement justice system makes loan recovery a slow process. So what do you how do you think we can unlock credit and make it easier for people to be able to buy cars? Because if you have cheaper credit, you have more people buying newer cars. Nigeria is, I mean, I'm sure we import less than 100,000 probably brand new cars a year. And of those, the bulk of them is government agencies, corporates. So How do you think we can unlock that credit issue? Because some people argue that one of the ways you can stimulate the Nigerian economy is if you can unlock credits or accelerate credit, then you can accelerate demand and that helps. So what do you think can be done to make it easier for people to access credit?
Okay,
Or is it
okay.
the fact
So
that we are just poor as a country? Some people might say, look, we are poor, so how many people can afford to borrow? Where do you start?
Before we go into that particular question, we just have to look at the substance because the lending business lend based on substance, right? And we are being very, very skeptical, and we just have to ask ourselves why the likes of Build Your Dreams are having finance agreements with Nigerian banks and Nigerian brand are struggling together. So it stems beyond just Nigerian of a thing is tends towards quality of the car we produce. So we have to look at the new regime and how has Nigerian performed in the past, right? So when we are going to be comparing number, we are going to be looking at Nigeria and Morocco. And when we look at under the then administration of Goodluck Jonathan, also to come up with something like this. And between 2012 and 2014, Goodluck Jonathan has Nigerian Automobile Development Framework, where we have a 35% import tariff was proposed, and also a 15% NAND, which is National Automobile Council on imported cars, and we have a surcharge of 5%. So when we look at all these, it added up that importing Nigerian car into Nigeria, you pay an additional 65% of the car value to clear your car at the port, right? However, we wonder why Nigerians keep going for second-hand or a used or an accidental car is because of the quality of these cars, right? When you import a Toyota into a Nigerian today, the durability of these cars spans a lot years, probably more years, when you compare to the Nigerian brand of a car. However, I feel this policy is punitive and regressive because when we look at Morocco, that we started the same policy at the same time in 2012, they are not where we are today. So currently in Morocco, what the government does is that they try to meet up with the global brand, especially the French giant, which is Renault, to create an industry or an assembling area in the hinterland of Morocco. And how do they work around this? They give them a subsidies to do this, and not that just subsidy. The government creates an infrastructure to support this industry. The governments tend to build trains that run between Mediterranean ports to the production site, and it moves about 3 times to 4 times daily, moving cars from the producing area to the port where it is exported to Europe. And we can see today from the figure we have from Morocco as of 2024, Morocco has moved from a country that barely export one car 15 years ago to a country that export over 700,000 cars in a year. And this has contributed about 20 billion um, dollars to their economy and also contributed 22% to their GDP. So I feel this is the approach Nigerian government should imbibe and not adding an extra layer of cost to Nigeria, because even when you are going to add an extra layer of cost to Nigeria, the imported car will still add more value and more resale value to a Nigerian for them to even consider going for a Nigerian car. And when we look at this, I feel this is also an additional levy, indirect levy, because you are going to register on NIP, you are going to do your Form M, and this also has to come at a cost for you to get your pre-certification cost. When you look at it, and we know that one of the key major players in the local market, which I won't mention his name, has been campaigning for an additional fee or levy for imported cars. Will this solve the problems? I think no, because currently Nigerian see this brand to be less efficient and they are too expensive when you compare to other foreign imports. So what I feel the country should do currently is to drive out a policy that support this industry. So when we produce cars that are effective and they are of substance, the banks will be able to provide finance to Nigerian in order to avoid to purchase these cars and also increase their revenue, because this has to be a question of quality and not as if Nigeria can afford it. Because if build your dream, a Chinese car, already has a financing option in Nigeria, it means that the quality of cars we are producing in Nigeria today are not enticing to the financiers to avail credits to the buyer.
I agree because I'm also not okay. I've mentioned some names, but maybe I won't link them now. When I think of one of the most popular indigenous car brands, maybe one of the oldest ones, I I don't recall a bank, any bank anywhere, um, giving a credit facility because and that's all that tells me that look, if these things were up to scratch, because banks want to make money, but when you look at some of the imported brands, you can still find that the banks are somewhat, if you have a decent job or if you have decent cash flow, the banks are more willing to give you loans for those vehicles compared to the local brands. So it's either the local brands aren't up to scratch, or people just do not like the local brands. And if people don't like your brands, just nothing you can do about it really, because it's a car. In some ways, um, buying a car is an issue of functionality, and it's also a lifestyle thing. It's like your phones, by either using Samsungs or iPhones. You like what you like. So if people don't like any of the local brands, maybe that's one reason why you're not seeing demand there. So I totally agree with you. Lastly, maybe let's try and peek into the the month of April. Today, I believe, is the 3rd of April, third day of the month. The US Iran conflict, I'm not sure where to classify it, whether it's winding down, whether it's still on the front burner, whether people um, are taking this as the new normal, unlike what most people expected. People were thinking, oh, we're going to get taco, Trump always chickens out, but taco isn't exactly working. So yeah, somewhere in between. He's getting tired of the war, but clearly he's not wound down effectively. Um, on a global macro side of things, what what are you looking out for in the month of April? And we can really extend it to domestic. I mean, domestic, I guess maybe the biggest headline now would be March March inflation figures will be out by month end. But broadly speaking, um, this month, what would you be watching out from local and foreign scene?
Okay, so let's start from the foreign scene, right? So the expectation is that the world is going to be just like the 12 days war, and however, Iran took the world with a chalk, and currently the whole world is bearing the cost of it. So if the war persists in April, as we are, and there are speculation that there are going to be a grand invasion this weekend, we don't know because we see Donald Trump already relieving some general of their jobs. So we expect something similar tax might happen. So I expect to see the yield in the fixed income market to keep increasing. And as well, when you look at the equity market, which is the USA equity, I foresee a downward trend to continue for a while until when the war is over. So on our own local market, we are going to see persistent increase in fuel or energy costs as we currently experience until when the war settle. And even when the war settle, the price for crude oil is going to stay elevated for a long period of time, maybe a year or more, because the supply chain has been disrupted. So we are going to see a lot of pressures from downstream players. Their margin is going to be threatened, and also Nigerians are going to feel the effect in their pocket. So and secondly, the revenue side to the government. So I wish Nigeria can just take a let's say, can take opportunity of this. However, we won't be able, because when you look at our current production figures from February to date, we are currently doing below the 1.5 million average that we produced in barrel last year, which means that Nigeria as a nation stands not to benefit from this war if our production is not addressed.
I mean, I know there was some form of I saw a story a couple of days ago about the paperwork around activation of idle wells. The timeline for the paperwork work had been reduced. So fingers crossed, and let's see. Hopefully by towards the end of the month, we get the Q1 numbers for the likes of Aradel, Seplat. Maybe we can see how things would be. But I totally align with you. And in fact, I'd say probably my biggest worry is, and I don't know, but I'm reaching out to a lot of friends in the FMCG space. Last I checked yesterday, I saw petrol retailing between 1,250, 1,003, 1,330. If we see petrol hit 1,415 a liter, and if you see diesel at 2,000 naira a liter, I think that a lot of manufacturing outfits are going to feel that pain. They're already feeling the pressure because I don't think anybody anticipated a 30 or 40% increase in energy prices this year, at least anytime soon. Nobody could have predicted the war was going to happen. Was there likelihood of higher conflict globally? Yes, I think we are in a season of more conflict globally. Some people posit that, look, what even if you have the war ending today, it's kind of going to be, you're going to have flashes every now and then. So um, I think we are in a turbulent period uh, domestically and globally as well, because of what's happening around the world. So I guess we look at how things are. We should definitely catch up later in the year to see how things go. So thank you for joining, and to everyone who's followed. A lot of people tend to watch because we have a lot of people in the Senko community that I know that are going to watch this. So I'm going to give a special shout out to them. Don't just stick at watching. Go subscribe. We have few people subscribing. We have more people watching and subscribing, which is interesting because if you're watching, you find the content nice. Or if you're not subscribing, you're forgetting or you're just not doing it. So I want everyone who watches this episode to subscribe. And when you do so, drop it in the comment section. Let me know and give me a shout out. So thank you, Sunday, for giving me about an hour of your Easter holiday. And have a nice weekend. I don't know how to say have a nice weekend because any season, I have maybe like 2,000 pages of reports to look at. I don't think anybody's going to have rest this weekend, but I hope that you find the time to rest, and I hope everyone listening finds the time to rest. Yeah.
Yeah.
So, have a lovely weekend ahead. Whatever remains of the weekend after you subtract work.
Thank you, Onome. It's a pleasure being part of the show. All right. Have a great weekend.
You too.